Hello everyone, welcome to the Financial Information channel. My name is Marvin. In this video, I am going to do a stock review. And before I start, I make videos about the stock market, personal finance, and how to make money online. So if you're interested in those topics, you can click on the subscribe and the notification bell. Now the company that I'll be reviewing is called BSTI Corporation. That company is located in China. Let's take a look at the business and exactly what they do. Now you can see BST is engaged in providing supply chain solutions. The company offers a cloud-based platform and BST Cloud, which is integration of online and offline retail to offer delivery. And the company offers a lot of service that include supply chain management, BST Store, BST Cargo, and BST U Cargo. So in a few words, the company offers a lot of services that are very similar to UPS and FedEx. And there has been a lot of interest in this stock. Now, this company came out to the stock market in September of last year. During the first day, the company shares moved up over 14%. And the company came out with around $10 per share on Tuesday, September 19, 2017. So right from the beginning, the company came out and had a good day. However, during the next few weeks, the share price started to move down. What I found interesting is that Alibaba has a lot of ownership in this company. At this moment, the ownership is around 23.4%. And I actually do like that number, but keep in mind that Alibaba is invested into similar companies in that specific space. And I'm going to put on the screen the other two companies that Alibaba is investing in China, and that just gives you an idea that specific space is really attractive. I actually do like the fact that Alibaba has invested a lot of money in this company, but one of the most interesting facts is that the CEO used to work with Alphabet, and the CEO name is Johnny Chow. He worked at Alphabet as a co-president until late 2016. And this is actually good news because you can get an idea that the CEO is very familiar with the stock market. Now, one of the biggest risks is that BST has a lot of competitions in China. I'm going to put on the screen the other companies that are competing with BST. And two of those companies had the support of JD.com. So that is kind of a big deal in my opinion. But the good news is the company reported earnings on March 1st and the earnings were actually really good. Now let's take a look at the screen to see how they reported. Now you can see BST has only reported earnings twice. During November, the company reported a net loss of 27.63 million. It beat on the revenue. However, during March, even though it had a net loss, the revenue was even better. Personally, I would like to get more earnings so I can get a complete idea how the company will turn around in the next few quarters. And even though that this is the second time the company report earnings, it actually ended up being the fiscal year. Let's take a look at the fiscal year numbers. Let's take a look at the revenue numbers. In 2015, the company had a 71%. In 2016, the company improved the revenue year over year over 68%. However, last year, the company improved the revenue by 126%. And the gross margin came out around 2.4%. And since the company is not profitable, it had a net loss. The net loss in 2017 came out around 922, and that is based on the Chinese currency. That is anywhere between 130 to 140 million dollars. And let's take a look at the revenue growth between different spaces. Now in this report, they break down the revenue growth in different spaces. The supply chain management revenue grew actually less than 2016. In 2016, the revenue came out around 49%. In 2017, around 29%. In Express, actually the revenue grew up quite a bit from 45% the previous year to around 137%. And in the other two, which is Freight and Store, the revenue year to year actually declined. Now, based on the numbers, the revenue came out looking impressive. Now, keep in mind, the company is losing money, it's not being profitable. However, I think within the next 3 or 4 quarters, the company is going to be very close to being profitable. Even though the company is losing money, it is a good idea to look at the fundamentals. And as you can see in the screen, the share price at this moment is at $9.85. It has a market cap of around 3.6 billions. And the EPS is negative because the company is losing money. The forward price to earning is negative 197. Now on the financial highlights, we just saw the company finish the fiscal year and most of these numbers are going to be negative. These statistics take the average, and since the company is losing money, you won't see any positive, except in the quarterly earning growth, which is over 100. Now in terms of the balance sheet is actually positive. They have more cash than debt. The company has around 167 million in cash and around 193 million in debt. Now when the company is not making any money, I like to pay attention to the short ratio and the percentage that is owned by institutions. Now the percentage that is owned by institutions is around 22% and the short ratio is around 4.37%. Those numbers are actually not that bad, except the institution percentage is a little bit low. That gives you an idea that it has a lot of potential, even though at this moment it's not owned by a lot of institutions. As you remember, I mentioned earlier in the video that the IPO came out in September, and that is really important because on March 19, the pre-IPO shareholders will be able to sell the shares on the stock market, and that is called 180-day lockup periods. And I think the share price might take a hit during this week and next week. And since the company shares might move down, let's take a look at the fundamental analysis. Now you can see this is the daily technical analysis. The RSI is a little bit in the middle point, even though that is turning bearish. The stock has a resistance around the $11 price, and it has a support around the $9 price, and another support around the $9 with 40 cents. The average volume per day is around $1 million per share. So there is a chance that we can see the share price around the $9 with 40 cents. And with that said, BEST actually has a lot of potential in the stock market. China is the largest in revenue in terms with logistics. Last year, China came out with around 1.6 trillions, and the United States came out second with around 1.4 trillions. I think that brings a lot of potential for this company. Most analysts expect a compound annual growth of around 15% in the next 3 years. So that's where the huge potential comes. The company is not making any money at this moment, so that brings a lot of risk. However, I think the share price is going to move up, probably not in the next few months, but in the next few quarters. And once the company shares are really close to become profitable, that's where the share price is going to go up huge. And that is going to be everything for this video. Please leave in the comment section below what did you think about BEST Incorporation. I think it has a lot of potential. And as always, you can like this video if you find it helpful, or dislike it if you didn't like it. And remember, you can subscribe to the financial information channel. I'm going to continue making videos about the stock market, personal finance, and how to make money online. I want to thank you once again for watching the video. Have an excellent day and take care, my friends.